How to prepare a T2 corporate income tax return. If you're a CPA, accountant, or financial advisor working with Canadian corporations, today's video is for you. We are delving into the fundamental aspects of preparing a T2 corporate income tax return, a crucial task that ensures compliance and optimizes tax outcomes for your clients. Understanding what T2 return is? It's the mandatory tax return that every corporation in Canada has to file annually, even if there's no tax payable. As per CRA, over 1.9 million T2 returns are filed annually, making accuracy and timeliness vital for every accounting professional. Why it matters? It determines how much federal and provincial tax your corporation owes, and incorrect filings can lead to penalties, audits, and cash flow disruptions. Who needs to file a T2? Before preparing the return, make sure you've got these in place: financial statement, general ledger, plus trial balance, prior year's T2 return, CRA-issued business number industry classification, schedule of capital assets, and CCA information. Missing even one of these can delay your filing process or lead to an incomplete return. Step-by-step breakdown of the T2 return identification section. Enter business name, address, fiscal year end, and NAICS code. Ensure these match CRA records to avoid rejection. Key schedules to include: Schedule 1. Reconciliation of net income for tax purposes. Schedule 8. Capital Cost Allowance, CCA. Schedule 50. Shareholder Info, especially for private core. Schedule 101-25. Financial Statements. These are mandatory unless you're exempt under CRA rules. Calculating taxable income use. Schedule 1 to adjust your client's accounting net income for tax purposes. This is where you factor in non-deductible expenses and taxable capital gains. Apply for available tax credits. Don't miss out on SR and ED credits, investment tax credits, small business deduction, SBD. Data highlight. The SBD limit is now $500,000. And for qualifying corporations, this could translate into thousands of dollars in tax savings annually. Common mistakes to avoid: not reconciling Schedule 1 correctly, incorrect depreciation on capital assets, forgetting related party disclosures in Schedule 9, misreporting passive income, not attaching Schedule 141 when filing by paper. Filing deadlines and tips. Timely filing is crucial. The T2 return must be filed within 6 months after the end of the corporation's fiscal year. For example, if the fiscal year ends on December 31st, the return is due by June 30th of the following year. Late filing penalties? Preparing a T2 return may seem complex, but with the right tools and knowledge, it becomes manageable. Need expert help with taxes? Reach out to NCS Global today.